Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that just kind of zigzag, pump and dump action that keeps happening on the Bitcoin chart as we slowly grind down on that falling wedge. Guys, there is just red across the crypto ocean here. Bitcoin dominance is actually popping up. So money is fleeing into Bitcoin right now. Make of that what you will. Guys, next week I do want to give you a heads up that on Tuesday we will be getting that CPI data, which will be that indicator of inflation. And then also on Wednesday, we're going to get PPI data, and both of these are pretty serious for the Fed. Now, the Fed primarily uses PCE data, which is neither of these two, but these two really do constitute a huge part of the base of the other considerations that the Fed gives. So that will give us a little bit of insight into whether or not the Fed is going to raise rates again, or as if many have suggested, they're going to take a little bit of a pause because kind of recessionary forces are already taking over, which in my mind suggest that the Fed will have no problem meeting its target inflation rates in terms of lowering inflation by the time the recession is over. However, the Fed may decide just to be a little bit over aggressive, and a lot of the bears are trying to push the Fed in that direction. They want to just kick the legs out from under the market. And I don't think it's necessary. I've looked at the data, and at least in my estimation, I think that we're good to just allow the recession to take over now. And so I would be one who would be on the side of just pausing. And then if we get any spike, then yeah, maybe you could hammer it down again or even do a double rate, okay? But I think that right now we're really at risk of damaging the economy with any more rate hikes compared to solving inflation. Again, guys, the recession will solve inflation. You just have to look around the world what's happening right now. It's not just the US, okay? For those people who are just hyper partisan, it's not this guy or that guy. It's literally the entire world is just having this, blowback from all these policies during COVID, when, in half of these countries, including the US, like there was somebody else in charge. And so all of this is just all swirling together. I know a lot of people want to make conspiracies and want to point fingers and all of this stuff, but we really have to be on top of this stuff. We could have a couple hard years coming up, and it's just because collectively a lot of bad decisions were made. And I tried to mention it like a year ago. We needed like Republicans in charge at the beginning of these rate pullbacks, and we needed Democrats in charge in terms of like when it comes time to like kickstart the economy. Like when the economy really gets broken down, we've never really come out of a recession unless we have government infusing some type of stimulus, okay? Whether that means lowering interest rates significantly or whether it means actually having spending packages that get people back to work and make companies feel more comfortable spending money again. Okay, it's getting that liquidity out there so that all of these, so that the private sector can feel confident that they're not the first mover who's then going to die on the tip of the spear, okay? That we're all going in, back into the economy. And so that's how you kickstart the economy. That's when you need Democrats in charge. But when it was time to like cut spending and all that stuff, again, sometimes we just do these things backwards. They spent like $6 trillion, between Trump and Biden together. Maybe even more than that. Almost 10 trillion if you think about everything that just all swirls together. And it's just so much money, guys. It's just so much money. It's unbelievable what they've done, and the blowback is just the cost of it comes to us in the form of inflation. That's why they have to hammer inflation down. Our lives will get wrecked if inflation just spirals out of control. And so, these interest rates have been, a conversation for almost 2 years or so now. But I really think it's time to close that door. I think the rates are doing their job. We're obviously seeing this recession on the horizon. I've been job searching because I've been doing a career shift, and it's man, I've put out like 1,000 applications, and I'm just getting information from insiders left and right. Hiring freeze, hiring freeze. Everyone is doing a hiring freeze. They want to see how this recession pans out. They want to know what the Fed is really going to do because anything else can just really tip over a lot of these charts to the downside, can just tip over a lot of earnings to the downside. And the stock market itself is being supported by just a few companies. And so everything is very fragile right now. And I just think, these CEOs and these chief financial officers, everyone who greenlights, hiring, they're just a little bit iffy. They think they might be a little bit overstaffed, okay, considering what's coming up, considering their profitability. And so it's just not easy out there, guys. You just gotta keep hammering at it. As long as the job market remains relatively healthy, and it is, it really is. They're still struggling to find workers for all sorts of specialty jobs. Unfortunately for me, I'm a cross-functional manager, but so basically a generalist. But with I have a lot of experience. It's just the need right now is for people with very serious education or training in either technical or very kind of nichey work. So again, guys, like if you can go get some type of technical skills, right? You don't have to go necessarily to college, but you should get like some technical skills, whether it's even plumbing, right? Plumbing or anything that's just very specialty, and you gotta have a certain set of know-how, then that's still in very high demand right now. Okay, if you're a compliance manager and you have all these certificates, for whatever type of compliance, right, OSHA or whatever, that's where the money is still at. They're looking for these people with PhDs, with master's degrees, with all these certificates of technical training, or with years and years of experience, hands-on, with the actual like machine parts and things like that, right? If you're perhaps in like machining, that sort of thing. We've kind of went a little bit too far in the direction of just general degrees, right? We just went too far in the direction of community college, where a lot of people have their underwater basket weaving degree, or this or that. Yeah, and there's a need for that. It's just that it's saturated, and a lot of it is just an unnecessary expense in a recession when they're trying to shore up the bottom line, and they already have the majority of those programs in place, and yet they're looking at a dwindling consumer base. They're looking at dwindling sales, and so they just can't justify expanding it unless it's a very specific skill set. So, I don't know, to any of you guys listening who may be out there wondering how you should train yourselves, accounting is always a good one. Bookkeeping and accounting, there's always demand for that. There's always demand for machining and, really knowing your way around these type of like metal shops, and, the compliance rules that goes along with it. If you can get a bunch of certificates in regulatory and compliance for factories, right? Whether it's food factories or whatnot, right? If you could get a bachelor's in science in food science, that may be something that you're not thinking about, but you could do something like that. And you can run like any type of food factory, like a milk factory, or any type of food that you could think about. You could literally run it. Okay, so you're not, it's you got to think outside of the box these days. A lot of this manufacturing is going to start coming back home, or a lot of these companies are going to need some type of advisors on it, just because we're decoupling from China. There's that big threat of a potential war with China in maybe a few years over Taiwan. And so, we have to be ready to go in case, there is some type of a new Cold War with China, right? And those kind of skills are going to be in much higher demand than back in the 90s and the 2000s when it was just really the good times for the US and you could literally get a degree in anything that you wanted and then just go out and apply for your jobs because it was just constant market expansion, constant market expansion, constant market expansion during globalization. Well, that's not here anymore. We're now having renationalization, we're having deglobalization, and so you know you just have to shift with the times, guys. Okay, and so please develop your skills. The next couple years, we don't know how it's going to be. There's a presidential election, so there's a good chance that the politics is going to kick the hard times down the road. It just happens every presidential election cycle. It's usually the case, not always. It could be pain, but usually is the case is they figure out some way to kick the can down the road just a little bit. Then whoever the new president is, suddenly they're faced with a reality, right? And then the market takes over, and usually the case is that the downswing then comes, and so that's when things really hit the fan. So if you guys don't have your plan in order, I did tell you this 2 years ago, guys. 2 years ago and a year and a half ago and 6 months ago, I told you, make sure to get your jobs lined up. If you needed promotions, then I told you a year ago you should ask for your promotions. That was the time. These days, it's going to be very hard to get a promotion, and pretty soon it's going to be hard to get a job. Okay, so yeah, just think about that stuff. A little bit of life advice there, guys. Just kind of kicking, kind of waxing philosophical there. While talking about the CPI and the PPI, let's just go over to the Bitcoin chart here. You can see that we got one of those shakeouts, one of those vicious Darth Maul candles up and down. And guys, I just want to show you the previous chart because, yeah, we want to have some, transparency over here. I think a lot of you guys don't, still don't fully understand the system that I'm using, but just want to show you how well it's working. And look at this precision, right? This retest precision right here. Look at the second candle. It's right at that bearish control line. So I just want to show you, that, these lines that I'm putting out there, they are working. Now let's go ahead and go just back in time to something that's pretty easy to understand. So here's one of the previous ones. Obviously, this would be when I gave it to you on the 1 hour, and we pumped up. We tried to go to the bullish control zone. We got rejected there, so we didn't flip my key level. But look how we tagged it perfectly, guys. Okay, we tagged that key level perfectly. We weren't able to be accepted by it, and so what did that suggest? It suggested we were going to probably come back. Well, we came back, we lost all of this neutral point of control, the general continuation, the momentum pool. We tried to hold on to it. Okay, this one candle was still attached to it. It looked like it closed below, but actually it was still attached to it by its wick. We got a positive candle, came back up. We just couldn't hold that thing, okay? And so what happened under the volatility pivot, under the momentum pool, and what do I always say about being under the momentum pool and under the volatility pivot? Well, there's a good chance that if you lose that, it's a very high probability trade in that direction, whichever side of it that you're on. And so here we were on top of it, right? And it was a high probability trade to the upside. Here we were below it, right? And it was a high probability trade to the downside, and that's what we got after a retest, okay? And look at that, just using the system that I created for you guys, you could have got that pretty massive move as kind of like a little sniper or whatnot. Guys, then we just came underneath the bearish control zone, popped back up, retested the bearish control zone, and they don't call it the bearish control zone for nothing, right? Why would I call it the bearish control zone? Because look, the bears are in charge, so what do? They just smack them back down, okay? Still bearish. You can expect this type of thing in the bearish control zone. Say, you're not welcome. You're not welcome back up here, okay? Gonna have to do a little bit more work to earn your way back into the normal price action. That was the 1 hour. Let's go ahead and take a look at the 6 hour. Again, guys, these are previous charts. And if we jump over to the 6 hour, you can see we would have been over here when I was giving you this setup, and we were underneath the Bollinger Band's midline. We attempted to get above it. We weren't able to hold it. You can see these are all bearish candles on top of it. So technically, we were still just testing it, and we never held it. So underneath the Bollinger Band's midline, underneath the volatility pivot, right? Underneath the momentum pool. And what was the most likely outcome, guys? I think you understand my system now. Yeah, just a drop, right? We not only dropped the bearish control zone, but we actually broke down it, and then found some support. And now look, we retested the bearish control zone, and just like the 1 hour, the bears said, you know, you've been breaking down too much. Keep trying, right? So again, like this type of a play could have been taken off of this setup. This is why I'm creating these setups for you. Some people may think, that momentum pool, that's way too complicated. I don't see other guys, using a momentum pool. Why is this weirdo, using a momentum pool? Well, that's my creation. And it's just to tell you, like, we're just kind of like in no man's land in this area. Like, we could be connected to the momentum pool. It's okay to be above it or below it if we're still touching it, right? We could just be like garbage price action around the momentum pool. But as soon as we really lose it, then you can expect the trade to just continue in that direction with a high momentum probability and a high volatility probability, because obviously we're looking for the volatility pivot and the momentum pool. Now, that's the 6 hour. So again, like just a brilliant play, right? Let's go to the daily. And on the daily, you can see the exact same thing. And moreover, look how perfect it is on these candles, okay? So we would have been over here while I was giving you this setup, and I probably was saying something like, I'm not really sure about this. I'm not really confident last episode that we could like push back up. I just didn't see any particular play. We were just in the middle of the momentum pool. We weren't on top of it. We weren't below it. And we definitely weren't above the volatility pivot. And so, the play would have been just to see like what happens. Do we get embedded below the momentum pool? Do we get embedded below the volatility pivot? Well, from there, the statistical likelihood is to take the play to the downside. Now, what would have happened, right, if we would have put a candle in up here? Well, nothing. We're still just kind of sideways because we haven't captured the volatility pivot yet, right? And so really you want to be above the volatility pivot and above the momentum pool. But the momentum pool is kind of front runnable, okay? These add lose momentum levels over here, it's kind of front runnable. That's why I separate these two. I am going to consider the idea of merging them into just one general area, so it's easier to track just one kind of box rather than thinking about two different levels. It's a little bit complicated, especially on multiple time frames. So this episode with the new levels, again, we're taking a look at the previous levels. I'm going to just experiment with a slightly different way to look at the box, which you'll understand. But again, like below those two things, down, right? Above those two things, up. That's the basis of my strategy. And no, we're not getting the best entry. We're getting the highest probability based upon momentum. Okay, this is momentum and volatility trading. It's not smart money trading. Okay, and by the way, smart money trading, they don't know if they're going to come back up. Okay, like they can buy down here, but they have no idea if they're going to come back up or how long it's going to take. They're just going to hold until they do. You understand? But this chart, it could just continue to go down. And so, smart money may buy down here, say, there's liquidity down here. I'm going to get this. And then, the candle came down here, so we got a great entry. And if it takes off, then the smart money's going to say, yeah, you dumb money, like you didn't get a good entry the way that we did. Well, yeah, you got a perfect entry, but you got a really low probability momentum and volatility setup, because your volatility pivot is all the way up here. You're underneath the neutral point of control, and you're underneath the momentum pool. And so there's a statistical likelihood that you could breach this bearish control zone and just go down. Okay, like you don't have anything supporting you. Your volatility pivot isn't down here. Volatility pivot's up here. So with all due respect to the smart money plays, I just you know there's multiple different ways to trade. Okay, and if you're perfectly fine buying some liquidity or something and then just waiting for the chart to reverse, more power to you. But I'm looking to capture these candles. I'm not looking to worry about this chop. Okay. And you buy down here, you could just be waiting for a very long time until it comes back up. Just different ways of trading. And I totally respect every type of style that works. Okay, as long as you have something that works. And I am studying those smart money concepts just more and more, and I'll probably integrate it more and more into my own thinking. Right now, we are using uh, different forms of like fair value gaps and things like that. So if it makes sense, we'll integrate it. But this is what I'm looking at right now. Guys, that was the daily. Let's go ahead and take a look on how it worked out with the 2-day. Look, guys, same thing, okay? Underneath the volatility pivot, underneath the momentum pool, the play was to the downside. Had we flipped on top of it, then the play would be to the upside. Look, we'd get embedded above that Bollinger Band midline. Yeah, the play would have been to the upside up here. As long as we're underneath the Bollinger Bands, underneath the volatility pivot, underneath the momentum pool, what are we doing, right? Like we're just playing to the downside. There's no reason to be longing under those conditions until you get a good setup. But you had the bearish setup, so and it worked, right? I mean, this wasn't the biggest candle or anything. There wasn't really that big of a volatility compared to like something like this, right? It's just a little candle here on the 2-day. But that was the trade, and it was accurate. Okay, that's the key point. It was accurate. Look at the 5-day. Go over to the 5-day chart. You can see. Oops. There we go. You can see volatility pivot was up here. Momentum pool was here. Yeah, just ignore this one. Like when we were on this candle, we could have suggested, yeah, we could have flipped that momentum pool and tried once again. That's what I said. Like we still had a chance, guys. We still had a chance to get above that Bollinger Bands, and we could have, just grinded our way up from here and then eventually taken out the volatility pivot. But when we closed the 5-day, which I did give you guys, if we close the 5-day underneath the hold momentum level, which was this is the bottom of the momentum pool, and we closed underneath the volatility pivot, then the play was what? To the downside. The play was to the downside to the neutral point of control, and then if we lose the neutral point of control, we can guess that we're going for this liquidity, or perhaps going to go for the bearish control zone. So again, like 22K is still on the table for me. In terms of talking about 29K, we're just not in that conversation right now. Had we closed the week up here inside of the momentum pool and none of this happened, right? This is just today. It's just one day. This is 5 days. So had we closed yesterday up here and then just gotten here, I would have said the play was more likely to the upside. And then up here, I would say very high statistical likelihood to the upside. So the alpha momentum pool strategy, it just worked again. It's brilliant. So those are your previous setups, guys. I'm just, I'm still a little bit under the weather, still a little bit sick. So just trying to have a conversation with you today, just taking it a little bit easy. But let's go ahead and try for some of these new setups. So let's go ahead and look at the 6-hour. So this is new, guys. This is the new one for today, okay? Or at least for this 6-hour period. And you can see, again, okay, like the start of this candle would have been up here. And where did it start? It started at the bottom of the momentum pool, which is under the volatility pivot. So here you can see the new way that I'm starting to mark this out. I'm just going to And I may only do this if they're close together, because if the volatility pivot is way up here, it just, it would be insane to have a huge momentum pool. But as long as they're in the same area, or maybe on the same side of the neutral point of control, I think I'm just going to merge it into one box, because again, the bias is on top of the momentum pool on top of the volatility pivot. So this momentum pool is literally just these little indicators right here, but that's too narrow. And then the volatility pivot is here. So I think, the play is just on top of here. You can see the Bollinger Bands would have come down. We would have gotten embedded on top of it, and then the play would have been to the upside. That's going to be the upside play. But as it turned out, underneath the momentum pool, underneath the volatility pivot, and so the play is to the downside. And that's exactly what's happening already. So this 6-hour candle has 4.5 hours left. But you can see it's already going pretty hard. So, usually price action doesn't turn around that fast, but this one is in a hurry. And we're underneath the bearish control zone. So the first thing that we want to see on the 6-hour is for us to recover the bearish control zone at 25,714. If we can do that, then maybe we've flipped, a couple of these candles over here into support, and maybe we have a chance to come back at the momentum pool, which will re-enter it above 26,032. But I don't really get excited about this chart to the upside unless we're above 26,232, which is that volatility pivot, guys. Okay, so here you can see how I've just made kind of a new way of making the momentum pool, where I'm just connecting it to the volatility pivot. And so it's just one thing that you have to look at. Are we above the box or are we below the box? Below the box, our bias is down. Above the box, our bias is up. Yeah, we can always try to take out these different levels. And yeah, if we take out a level, okay, if we set up here, then yes, the most natural trade is going to be to the next level. Okay. And same thing, we flip that one, then the next one is to here. And we flip that one, then the next one is to here. That's, that's how momentum trading works, right? You lose it, you get up here and then you pump up here and then you lose it. Then if you start to fall, then your next trade is down to here. Okay, just want to show you how that works. But right now it's not looking great. It's not looking great. Let's go ahead and go to the daily. On the daily, very similar thing happening here. Underneath the volatility pivot, underneath the momentum pool, and we're just dropping. Okay, we're just dropping right away at the start of this day, just dropping. We started the day up here at the top of the momentum pool. We could have flipped that and gone to the upside had we taken out the neutral point of control. We would have flipped the Bollinger Bands, get embedded up there. The move would have been to the upside. But as long as we're being rejected by the Bollinger Bands midline and we're underneath the momentum pool and the volatility pivot, then we are threatening to put bears into control. Now, bears won't take control until 25,335. So, can we hold this as support? Maybe, maybe. This was the level that we would play down to. Now the question is, can we bounce back up here to the volatility pivot at 26,090? If we fail to do that, it's going to show a lot of weakness. But if we can bounce back up to that and maybe even flip the volatility pivot at 26,090, then we're going to have volatility at our back for any random type of move in the market. And so really, if you're bullish or you want some hopium, then you're going to have to take out 26,090 on a daily closing basis. You don't want to close underneath 25,335. That's going to suggest continuation to the downside. And we really don't get super excited until we get embedded above here, just because of the neutral point of control in the Bollinger Bands. 27,058. So again, 27,000 is kind of my line in the sand. Let's see. The weekly isn't closing today. It's going to close in 1 day and 5 hours. But I just thought I would remind you of the weekly levels. And you can see that, last week we basically opened up at the bottom of the momentum pool. And just this entire week, we've been losing it. Okay, just every day that goes by, we've just been slowly losing it to the downside. And look where we came to. We came directly to my neutral point of control. Okay, so again, the alpha momentum pool strategy is just absolutely killing it, guys. Just absolutely killing it. Like, if we were going to start the week losing the momentum pool, where would you expect us to go? To the next level down. What did we do? Go to the next level down. Boom. All right. Alpha Fam's just killing it. Now, again, we didn't know that, right? We could have flipped up here, and then our next level to try at would have been this 28,000. So that's why we're also talking about 28, 23,000. You can see continuations at 28, 500-ish. And so somewhere in that area, like 28, 300-ish, we wanted to, get above that. We just weren't able to do it, guys. Okay, like that's just how the chart goes. Like sometimes you're just not able to do it, and so the natural next direction to look at, or the next level to look at, would have been this neutral point of control, and we do have to hold on to that. We don't want to close this week under the neutral point of control. That's going to put bears in charge. Okay, the bears aren't going to be fully in control until we get to 19,675, but if bulls are in charge above the neutral point of control, that's why it's neutral, right? Then bears are in control underneath, or they start taking control, right? So those are your key levels, guys. Let's go ahead and just pop the wedge on, just so we can see where we are here. And as you can see, we haven't really done anything special, right? Just, again, 1, 2, 3, 4. Do we count this as 5? I don't know. That didn't really tag it. So, maybe just 1, 2, 3, 4. Could we drop down a little bit, scare people, come back up, and then do something? Does this count as 5 and still we just get kind of a fake out? I don't know, but I'm still open-minded to this scenario. Either way, like if we do have some type of a drop in the chart and we hold above this low at 19,620, let's just say we get to like that, that 23, 21 kind of area. As long as we hold that area and come back into the wedge, I would be expecting that we flip it somewhere around, again, 27,000. That super critical 27,000 area. And if we do that, then I'm going to suggest that there's a play to the upside to 30K. Okay. So yeah, that's what we're going to be looking for. Now, let me just go ahead and delete some of those lines. And if we put on our EMAs, you can see that we're kind of grinding underneath the 200 and the 300 here, which is something that we didn't really do here. Okay. We had a dip below it and then a V-shaped recovery. But here, we dipped below it and then we just ground out on the EMAs. And now we're making a U underneath it. And that could potentially suggest continuation to the downside. So again, I'm looking at that 23 to $21,000 area first. That's the 6 hour. Let's look at the yeah, you can see on the daily, that's where the 200 SMA is. Let's look at the 3-day. That's where the 100 SMA 3-day is at. Let's look at the 5-day. That's where the 50 SMA 5-day is at. Let's look at the weekly. That's where the 300 on the weekly is. That's probably a pretty good support area. But yeah, if we do dip down, I could see us getting into that 20K area. And then I think it would be worth taking a chance, personally. Okay. Could we dip further? Yeah, of course. Just there has to be bounces along the way somewhere. But in terms of bullishness, just not seeing it right now. And again, if we go to the weekly, pretty sure that we're going to have some type of squeeze initiating here. Yep, you see that 9 and the 21. It is officially squeezing to the downside. It does have to close in another day there. And then we're going to be putting a lot of pressure on that 200, this orange line, that 200 EMA on the weekly. If we breach that, this thing could be a very powerful squeeze to the downside. If we hold this, then we could just kind of grind this out like this, and do that flip, maybe even do just a flash wick down there, right? So that's what I'm hoping for, just for the bullish case. But again, we could just pop down here and then just dramatically come down to those low 20 areas, maybe high teens, worst case. And I just try to remind people this falling wedge, that's a bullish structure. So 70% likelihood that you have a fake out and then a go to at least 30K, just statistically. Zoom out here. You can see that on our RSI, we have some type of bearish divergence building up over here. And so, yeah, it looks like our RSI is taking out the lows from over here. And this would suggest just bearishness, guys. And we are putting pressure on the middle of the RSI. So, yeah, just be careful. Those weekly divergences aren't to be messed around with. They tend to foretell something a little bit, not great. Let's go to the 5-day here. So you can see on the weekly and the 5-day, we have massive low volatility. So this thing does want to get pushed heavily in one direction or another. We've just been kind of overheated. I don't see anything too interesting there. 3-day has a chance to turn down. 2-day is freshly turned down on the jewel here. So that could suggest getting embedded into this bearish, zone. What's our lows? Tend to be around here. So could we get pulled even deeper? Yeah, it's definitely possible. I'm just trying to look for some hopium and I'm just not seeing it. We're just in pullback mode right now. There's nothing wrong. There's nothing wrong per se. If I look at this signal here, one of my trading heroes, a crown, like he mentioned that it's turning up here, but I just don't see it. Maybe he's looking at the 2-day. Yeah, I mean, we did get that cross right here in the last close. So I see what he's saying. This could suggest that the market's going to choose its direction in the next couple days, okay? Especially if we cross this 20% here. Then if we're headed to the downside, then this squeeze could be to the downside. So yeah, I see what he's talking about on that one. Yeah, we got a little bit of a cross here. See this, the daily, it's already pushing down. It's only 50%, so it has another 50% to go if it wants to get to the other side. 3-day. It's still contracting though. So the 3-day, I mean, the 5-day is starting to push, but that could be a fake out. It's not above 10% yet. And the weekly, it's not done yet. So these higher time frames, they could pull the old switcheroo. Okay, so I don't think I'm just gonna have to disagree with Crown just a little bit. I don't think that it's 100% there yet. Okay, the 2 day is giving us a front runnable signal to the downside, which in the next 2 days, then we're going to see whether or not that gets confirmed. Okay, because we have conditions and then validations and then confirmations. So we're going to see if it's confirmed. It's already been validated, at least for the 2 day. But for the higher time frames, like the 3 day and above, like we just don't even have the right conditions yet to call it out. I mean, we have conditions, but we don't have validations for it. Okay, and so just gonna have to wait a little bit longer, guys. I know this episode was a little bit slower paced, and it just kind of meandered a little bit, but I hope that helped you understand what's going on here on the charts. I hope you have a clean idea of what we've been looking at for the last couple months. I know that this chop hasn't been easy to trade. It really did come, after, we were basically calling the bottom over here, and we did, endorse longing all the way up on this thing. I was bullish. I thought, we could take out, these wicks over here. You see this kind of wick of resistance, this wick over here. You got these kind of like push-up wicks over here. I thought we could take out that zone and maybe at least get 33, if not try hard for higher. We still could. This isn't game over yet. But I just want to point out that we did have a nice run. The stock market is starting to get overheated. Some things may need to have some pullbacks, just in general. The Fed could increase rates. We're going to get that CPI and that PPI data next week. Maybe that's going to be determinative in some way, and then we can take it from there. So I will just pay attention to what goes on next week, and then also in the next couple days, I'll give you an update on how our volatility is shaping up with some of those higher time frames. Maybe the 3 day is going to join the 2 day, and then that's going to be a pretty strong signal, especially if the 5 day gets in on it. But as long as the 5 day and the weekly are just up in the air, then I do see us still having the possibility to have a fake out to the downside and then just a punch into the sky. Okay, can't be a perma bear on this. Guys, that's your alpha for the day. Stay safe and happy trading.